Is there anyone who wants to say good afternoon to us in person? You're too shy. Doesn't matter. Okay, so we are going to carry on with that class question 2, the one that we did last week on Friday. So it's still Monte traders. So let us perhaps just recap what we have done so far. We have calculated depreciation on one category of property, plant and equipment using the straight line method, and then we also use the diminishing balance method for another category of property, plant and equipment. So we brought our depreciation up to date until the end of the financial year. Then there was a disposal of one of the assets, a motor vehicle. So we calculated that, we recorded that, we did it in journal entries. So initially we recorded it in our general journal. We also posted it to our general ledger accounts. And then there was also the acquisition of a new motor vehicle, which we've recorded again in general journal as well as the general ledger accounts. Now, most of these standards, they do not only deal with measurement, they do not only deal with definitions. One of the more important parts of any of the standards deals with the presentation and disclosure. The presentation and disclosure of the item that is in that standard. And as we know, we are dealing with standard number 16, IAS, International Accounting Standard number 16, which is actually titled Property, Plant and Equipment. So today we are going to be looking at the presentation and disclosure of it. Now, when it comes to the presentation on the face of our statement of financial position, and we must bear in mind that when we talk about the face of the statement of financial position, it is the main body. It is the main part of the statement. And remember, we mentioned this at the beginning of the year, all of those statements, our statement of comprehensive income, our statement of changes in equity, our statement of financial position, we want to present them all on one page. It must not be necessary for the user, if they look at, let's say, the statement of comprehensive income, to then go to a second and a third and a fourth page, because then they lose track of the overall picture. The same applies to the statement of financial position. So we are only going to disclose on the face of the statement of financial position under non-current assets, the aggregate, the total carrying amount of all our property, plant and equipment, right? So there we are not going to disclose cost. There we are not going to disclose accumulated depreciation or anything else. It'll just be the balance, the carrying amount of the aggregate, in other words, all the categories of property, plant and equipment. The same would apply to other kinds of non-current assets. So if we had, for instance, intangible assets, we would only disclose the carrying amount of the total intangible assets on the face of the statement of financial position. If we had another category of non-current assets, such as financial assets, again, under our non-current assets, on the face of the statement of financial position, we will only disclose the carrying amount, the total of all the various financial assets, right? So, ladies and gents, what we now need to understand is that we do need to provide additional information. But because we do not want our statement, any statement, including the statement of financial position, to cover more than one page, because like we said, then it becomes confusing. It means that extra additional information must be disclosed in the notes to the financial statements. Now, you know, very often people think the notes are just random little scribblings that you add to the financial statements. No, they are also a structured part of your full and complete set of financial statements. So for each category of let's say, non-current assets, such as property, plant and equipment, or intangible assets, or what else did we mention? Financial assets, or if this had been a farming company, the biological assets. Then we will have to have an additional note as part of our complete set of notes to the financial statements to then provide the additional information. Now, ladies and gents, what is required by IAS 16? There are quite a number of things that are required. Most of them we are going to be looking at in Financial Accounting 2 and 3. As we know, we are going to go to a more advanced level in Financial Accounting 2, and then the ultimate level in Financial Accounting 3 when it comes to property, plant and equipment. But the one thing that IAS 16 requires, and that is the one that we need to discuss this year and today, is you have to provide a reconciliation. And I'm just going to perhaps type this. This is the same set of notes that we've used last time. So when it comes to the presentation and disclosure, we've just spoken about the presentation. That's on the face of our statement of comprehensive income, but then the disclosure, the additional disclosure in the notes, what is required? We have to provide a reconciliation between the opening and closing net carrying amounts. Right, so that is what is required. We've got to provide a reconciliation between the opening and closing net carrying amounts. The net carrying amount, ladies and gentlemen, is simply what they refer to as the gross carrying amount. Maybe let's just talk about the gross carrying amount before I carry on. The gross carrying amount, in our case, we are using the cost model. You remember we spoke about this about a week ago. We said we are using the cost model. So in the case where we are using the cost model, the gross carrying amount will equal the original cost of the items that you still own. Only where we are using the revaluation model, then the gross carrying amount will not be the cost, it will be the most recently revalued value. But like I said, that we only do in Financial Accounting 2. So for our purposes, the gross carrying amount is going to equal the cost, then minus or less the accumulated depreciation. In other words, the depreciation that we have accumulated over the years, those years that we have used this particular property, plant and equipment item over its useful up till our reporting date, right? So that will give us the net carrying amount, that one. The net carrying amount is the gross carrying amount, in our case cost, less the accumulated depreciation. Now it also states we must provide a reconciliation between the opening and closing net carrying amount. So that means in this reconciliation, which is the structure of our property, plant and equipment note, we will have to start with the gross carrying amount or cost, as well as the opening accumulated depreciation, and we must then end this with our closing at the end of the financial year, the closing balances for the cost or the gross carrying amount and the accumulated depreciation. So then the reconciling items, what reconciles the opening with the closing balances would be the movements on either the cost accounts or the accumulated depreciation accounts. Now, when I say movement, movement will be, for instance, when it comes to the cost of the items, either additions or acquisitions, items that you have added, property, plant and equipment items that you've added during the course of the year, and obviously then also disposals. But when it comes to disposals, we must remember that we have got the cost of the item that we've disposed of in one account, and we've got its accumulated depreciation in another account. And as we've mentioned last week, when we dispose of any property, plant and equipment item, we must get rid of any balance that relates to the carrying amount of that particular item that we are disposing of. So that includes the cost as well as the accumulated depreciation. There are other possible reconciling items. The only one that we are going to be dealing with at this point in time in Financial Accounting 1 will then be your depreciation expense for the year. The depreciation expense obviously doesn't affect the cost, but it does affect the accumulated depreciation. Next year in Financial Accounting 2, we are going to look at additional movements like what we refer to as impairment losses and so forth. Anyway, ladies and gents, once we're done with this final part, the disclosure, the note, then I will load this complete document for you to Blackboard as well. So here, I've got a typical structure. So let's maybe just analyze the typical structure of a property, plant and equipment note. And by the way, ladies and gents, please write the words property, plant and equipment out. If you are drawing up your financial statements, so on the face of your statement of financial position, as well as here in the note, because as you know, PPE nowadays can stand for something else. As you know, nowadays we also talk about personal protective equipment. That's also a PPE. But IAS 16 doesn't deal with personal protective equipment. It deals with property, plant and equipment. Right, so please write it out. And in any case, we must now get used to writing. Thank you, Nompumelelo. We must get used to writing everything out in our financial statements, because what we are working towards is that we must produce financial statements that are ready for publication. Right? They must be ready for publication. We must be able to email it to the printers, the companies that's going to the beautiful glossy magazine, which we call our annual report, which includes the financial statements. And you know, we cannot expect from the people at the printing company to know what PPE stands for or what ACDEP means, right? So we are not going to use ACDEP abbreviations for accumulated depreciation when it comes to our financial statements. You can use it in your own work. You can use it if you just have to reconstruct ledger accounts and so forth. But as soon as it comes to the actual financial statements and the notes to the financial statements, which are an integral part of the financial statements, then we've got to write it all out. Okay, so we must be clear on that. So this is now the typical structure, ladies and gents. So we can see we are going to start with a carrying amount, and that carrying amount consists of the cost minus the accumulated depreciation, and that will be at the beginning of the year. Remember, this is now reconciliation from the beginning to the end of the year. And what will we end off with? Now, there we go, sorry, I went down too far. Then we're going to end off with exactly the same. We're going to end off with a carrying amount, but now at the end of the financial year. So in this question that we are dealing with, it was a financial year that ended on the 31st of December 2018. And again, we've got to go and disaggregate the carrying amount between the cost portion and the accumulated depreciation portion. Ladies and gents, what we need to do is we've got to allocate a column to each category of property, plant and equipment, such as equipment or vehicles or aircraft or plant or machinery or office furniture, for instance. So we're going to have a column for each of them. Now, clearly you can imagine that if you've got 4 or 5 categories of property, plant and equipment, you're not going to use the layout for this note. You're not going to use the portrait layout. You're going to use the landscape layout, right? Landscape, so that the page is, you know, if they read it, they'll have to turn the annual report with the financial statements 90 degrees towards their right, normally 90 degrees towards their right, and then they'll read that paper in at that page in landscape landscape mode. Right, you all know what landscape mode is. Maybe I should just ask that. You know what's the difference between portrait and landscape? Yes or no? Yep, thanks, Lauren. Okay, I suspected that. I knew that you would. Thank you, Aqua, as well. Yes, so we all know that if you take an A4 paper and the normal way is portrait, so it's taller than it's wide. But if you turn it 90 degrees towards the right, then it's wider than it's tall, and then you can get many more columns in. Okay, so now we have to go and populate this. So we are going to use our general ledger accounts. Remember, we've recorded all our various transactions last time in the ledger account. So now this is just a question of disseminating our ledger accounts and providing this information. So let's go and do that, ladies and gents. Doesn't matter which one we start with. Let's maybe start with equipment. So let's start with equipment. So the equipment consists of the cost. The carrying amount consists of the cost less the accumulated depreciation, and we know they are recorded on separate accounts. So now we've got to go and look at what was the balance on the cost of equipment at the beginning of the year. So we'll go right back to the top. We have the question. We see there that equipment, there we go, equipment at the beginning of the year, right? Equipment at the beginning of the year of 1,200,000. So we are simply going to take our figures and we are going to insert them in our note. So the cost of the equipment at the beginning of the year, there we go. So we're going to, if you are using Word or Excel or any computer app to draw up your financial statement, which most of us do nowadays, you can just copy your figures over. Okay, staying with equipment, ladies and gents, what was the opening balance on our accumulated depreciation account? So let's go up there. We see there is an account called equipment : accumulated depreciation. When we started this class today, I just reminded you of how we designed the names of our general ledger accounts that contain that combine to contain the carrying amount of property, plant, and equipment. So this account name, what does that indicate? It indicates the category of property, plant, and equipment. And in this case, it is just the equipment. And then also what the account contains. This particular account contains the accumulated depreciation. Okay, so now we're going to take our opening balance on the accumulated depreciation account, and we're going to go down to our notes to the financial statements for that year, property, plant, and equipment, and we see the accumulated depreciation was an amount of 240,000. Okay, but now we've got to be careful, ladies and gents. Now you've got to listen pretty carefully. When we have a journal, or any general journal, or when we have our ledger accounts, then we must know we've got a debit side and we've got a credit side, right? We've got a debit side and we've got a credit side. But when it comes to our financial statements, then we do not have a debit and a credit side because we are presenting all the information in columnar form, in columns, right? So there we do not have debits and credits. So now we've got to go and distinguish between the debits and the credits. So how are we going to distinguish, ladies and gents? I'm going to ask you to give me a few suggestions here. An asset for you. An asset for you. Do you regard that generally as a positive thing or a negative thing? Positive. Thank you, Lauren. Positive. Lubabalo, Sia, thank you. You are all correct. In actual fact, thank you, Leonard. It's early in the mornings, before the sun even rises, I do some crossword puzzles. I quite enjoy my crosswords with my morning coffee. And very often in the crosswords I do, they require you to provide a 5-letter word for a positive thing. And that answer is normally an asset. Then a liability for us, would that normally be seen as a positive thing or a negative thing? You owe money. Thank you, Lubabalo and Leonardo. Yes, thank you, Aqua. Then you see it as a negative thing, right? Because you know sometime in the future that money is going to flow out of your precious bank account and you have to pay to that creditor, right? So that is exactly the protocol that we are going to be following in our note. In all our financial statements, in fact, right? In our statement of comprehensive income, statement of financial position, statement of changes in equity, as well as the notes to the financial statements. And then next, you'll also see in the near future, the same applies to the statement of cash flows. So the cost, which is an asset, we are going to indicate as a positive, and the accumulated depreciation, we are going, which is a negative asset. I think I mentioned this last time. Some accountants refer to this as a negative asset. Others refer to it as the contra to the cost account and so forth. Okay. So, ladies and gents, there we now have the cost at the beginning of the year, as well as the balance on the accumulated depreciation account for which category of asset or which category of property, plant, and equipment, right? So now we have to go and complete that little sum. So 1,200,000 less the 240,000 gives us 960,000, right? So that is our net carrying amount at the beginning of the year on the equipment. So now let's go and do the same for our second category of property, plant, and equipment, which is vehicles. In the case of vehicles, we see that account, that general ledger account at the beginning of the year had an opening balance of 1,100,000. Right, so now we can go and provide that information in our note. Vehicles cost at the beginning of the year, 1,100,000. And then we go back and we see what was the opening balance on the accumulated depreciation of that particular category of property, plant, and equipment. The category now is the vehicles, and that was an amount of 480,000. 480,000, so we're going to insert that in the appropriate spot, 480,000, but now we must remember this is a contra to the cost, or a so-called negative asset. It means we have to indicate that as a negative, so we're going to have brackets around it. There we go, and then we must still go and add it up. So we see 1,100,000 less 480,000 is 620,000. You must please double check my additions. I have done this just on a computer calculator. Then, ladies and gents, once we've done that, we've also got to add it across, the so-called cross-casting. So here we've got one category of property, plant, and equipment called equipment. There we've got another category of property, plant, and equipment called vehicles. We could have had a third column. We could have had a fourth column, one maybe for equipment and one for office furniture. But anyway, once we've included that for all the various columns for each category of property, plant, and equipment, we've also got to go and add it up across. So if we take the cost and we add it up across, we get 2,300,000. And if we take the accumulated depreciation, we add that up across. Remember, if it's a minus and another minus, it's almost like adding the two together, right? So that will add up to 720,000, right? Have I made a mistake somewhere? Have I made a mistake? Yes or no? Have I made a mistake? What have I left out? Yes, I have actually. What mistake did I make? It needs to be negative. Thank you, Lauren. Thank you, Leonardo. Yes. So I have to indicate that as a negative. We've just said that a negative and another negative increases the total negative. Right. So that is incorrect. We have to disclose that as a negative. So we have to show that in brackets. And then, ladies and gents, what we do, we add the net carrying amounts up across as well. So 960,000, that 960,000 plus the 620,000 gives us 1,800,000 and is it 1 million now? I can't, where's my computer calculator? 580,000. Right, so we've added that up across, gives us 1,580,000. But always when we drop a table like this is in a tabular form. Many notes, even our statement of changes in equity, the same principle. We must always double check our figures. So the 960,000 plus the 620,000 must give us 1,580,000. And to double check that, we are going to take the 2,300,000 minus the 720,000. That must also give us 1,580,000. If it doesn't, then we've made a mistake. We've discovered it fairly early on, and then we can fix it. You know, once you only discover your mistakes right at the end, then you've got a lot to go and investigate. Where did it happen? Right. So at every stage we do that little check. Okay, ladies and gents, so now let's go and have a look at our movements during the course of the year. So let's perhaps look at our journal entries. Where did I do the journal entries? It was below that, not above that, below that. So here we have a journal entry, right? Journal entry that states depreciation, equipment, so that means it is the depreciation expense on the category of property, plant and equipment, which is the equipment, right? So there we had a charge, a depreciation expense for the year of 192,000. And then most importantly, we see the account that we have credited there was equipment, accumulated depreciation. So clearly that, because we've credited that account, that will increase the accumulated depreciation from the beginning of the year. So now we've got to go and put that in the appropriate spot in our PPE note. Now I must remember to go upwards. Right, so there we've got depreciation on equipment. So now we can go and include the depreciation on the equipment. Now, ladies and gentlemen, let's once again ask the question here. When it comes to the depreciation, does it increase our net carrying amount at the end of the year, or does it decrease our net carrying amount? You can type for me, does it increase the net carrying amount, or does it decrease the net carrying amount? Thank you, Leonardo. Thank you, Esona. Thank you, Lubabalo. Everyone, yes, it's going to decrease our net carrying amount. And as soon as we know that it decreases the net carrying amount, then we must also know that that must be shown as a negative, right? That must be shown as a negative. So far, so good. Okay, so we've got the depreciation on the equipment. So now let's go and return again to our journal entries. What else did we have? There we see that we had an account depreciation dash vehicle. So that represents the depreciation expense on the category of property, plant and equipment that we call vehicles. And again, most importantly, we see that we have credited the vehicles accumulated depreciation account with 160,000 rands, right? So that means that depreciation is a movement during the course of the year that had an effect on that account, the account that contains the accumulated depreciation on vehicles. So that means we must now also go and include that in our property, plant and equipment note. So if we go to our property, plant and equipment note, there under the appropriate category of PPE, we are going to include the depreciation expense for the year. But now, as you've all answered a few seconds ago, we know that that depreciation expense for the year is going to decrease our net carrying amount. So therefore, we've got to show that as a negative. Okay, so let's go and have a look. What else did we have in our journal entries? There, in our third general journal entry, we see that we debited vehicles accumulated depreciation by 640,000 and we've credited the cost. So that can only mean one thing. If you credit cost and if you debit accumulated depreciation, it means you have gone and de-recognized an item of property, plant and equipment. You've de-recognized an item. Remember, if you recognize it, if you acquire it, you will be debiting the cost of that item. But now you've credited it, so you're taking the cost out of the account, so it is the process of de-recognition. So that can only represent a disposal. Right. Now, ladies and gents, when it comes to a disposal, let's go and have a look. We've got the cost of the disposal was 1,100,000 rands, and the accumulated depreciation at that stage was 640,000. Let me get to the correct direction. So here we see we've already provided a line for the carrying amount of the disposals. So now we must remember we must take out the cost as well as the accumulated depreciation. So I'm just going to type it there. So that will be the cost less the accumulated depreciation, which I now again forget what it was. Let's go downwards, upwards. I can get it from here as well. It was 480,000. But let me just go and double check in my journal. No, it was 640,000. I'm sorry, it was 640,000 that we are taking out there. So minus the 640,000, right? So 100,000 minus the 640,000. So what will be the carrying amount of the disposal? It will now be, remember the disposal. Maybe I can just ask you that first. The disposal of an asset, will it increase or decrease your net carrying amount? You can type for me, please. Increase or decrease? Thank you, Lubabalo, Nikusana. Yes, if you take something out of those balances, thank you, Akona and Aqua, that means you are going to decrease the net carrying amount. Okay. So therefore, that must be shown as a negative. What did we just calculate that? 406. 460,000. End of brackets. Okay, so now we have looked at the disposals and we've looked at the depreciation, but we must still go and see whether there was possibly any additions as well. So let's go and have a look at our journal entries again. Remember, the debt and accounts receivable and the profit on disposal of assets will not affect your property, plant and equipment note. Here we see we debited vehicles cost and we credited trade payable. So that can only mean one thing. That is the acquisition of a new vehicle, right? A new item of property, plant and equipment that was recognized on that 31st of December. So now let's go and find the appropriate spot for that in our PPE notes. So I'm going to copy that figure and we're going to go back to the property, plant and equipment. That didn't relate to equipment, it related to vehicles. We've already typed for ourselves or written down the structure of this note. Remember, whenever we encounter a new financial statement or a new note, First step is we have to go and basically memorize the structure so that we can write the structure down before we even start looking at the figures that we require. Okay, ladies and gents, now just one little question I want to ask you here again. If you acquire a new item of property, plant and equipment, will that increase your net carrying amount or will that decrease your net carrying amount? Increase. Thank you, Lubabalos. Thank you, Leonardo. Thank you, Sia. Thank you, Aqua. You are all correct. So now, thank you, Ahmed. So we are now going to have an increase in the net carrying amount of our property, plant and equipment, that vehicle category. Right. So ladies and gents, let's maybe just briefly go back to our journals again. Have we now covered every transaction that dealt with property, plant and equipment? We did take that into account. We did take the second one into account. We did take the third one into account. We did take the fourth one into account. So that means we've taken into account, we've taken into account all the journal entries. We've also posted them to our general ledger accounts. Right, so now let's going to round off this whole property, plant and equipment note. So what we need to do now, ladies and gentlemen, if this is going to be the published version of our financial statements, then wherever there is no movement, we are going to type a little dash. So there were no additions regarding equipment, so we put in a dash there. There were no disposals of equipment, so we put a dash in there. There was depreciation, so let's go to the vehicles. In the case of the vehicles, there was an addition. We've got that there. Oopsie, I made a little. That should be just like that. There were disposals, there were additions, there were disposals. That line there is just for our own purposes to show our little calculation. So we don't need to put any dashes there, only where there is no item that caused any change. Right, so ladies and gents, so now we've got to go and add it across again. So what does it add up across there? That row is 1,260,000. Add that up across. That relates to our total now in aggregate. Remember, the total indicates the aggregate of all the categories of property, plant and equipment. So that adds up across to 1,260,000. That line, we add that up across, so it's a dash, which is a 0, minus 460,000. So that means that is going to be minus 460,000. That row was just for our own working. So now we go to the one that contains the row that contains the depreciation. So we add minus 192,000 minus 160,000. I'll look at that just now, which gives us a total of 352,000. Okay, let's pause there. Let me just go and have a look. Lauren, you have your hand up. Yes, would you like to ask something? Lauren, you're welcome to speak. Just remember to unmute your microphone. Oh, was it a finger trouble there? Okay. You know, it's strange how often that happens actually in our meetings as well, when we have departmental or faculty board meetings. Suddenly someone puts a hand up and then they actually wanted to click on something else. Thank you, Sharif. We are all crying with laughter, so it happens to the best of us. Don't worry. I've even once or twice when I wanted to click on my camera where I shared my video and I want to unshare that, I've gone and switched off my microphone and I merrily talk for another 3 or 4 minutes, and then eventually I see in the chat box many students have typed that we can't hear you, sir, and then I realized, uh-oh, I've switched off my microphone. Anyway, so it happens to all of us, don't worry. Okay, so now we've just got to go and complete this note. So that means we've got to go and fill in the figures at the end of the year. Now, what we normally do, ladies and gents, we calculate our closing carrying amounts in one way, and then we check it in a different way. And I'm going to show you both methods here. So the first way that we can do this is simply take our carrying amount at the beginning of the year. So we take our total carrying amount at the beginning of the year, 960,000, minus any movements on it during the course of the year. So in the case of the equipment, it was just the depreciation. So that 960,000 less the 192,000 will then give us, if I added that up correctly, hopefully 768,000, right? So that gives us 768,000. But now we must also go and disclose the components of that carrying amount. And what does that carrying amount consist of? We know it consists of the cost less the accumulated depreciation. So what is the cost at the end of the financial year on the equipment, ladies and gents? If you can type for me, what is the cost balance at the end of the year? We haven't acquired anything. We haven't disposed of anything when it comes to the equipment. So what is the balance on the cost account that deals with equipment at this stage? Correct, Leonardo. Correct, Pisana. It is still 1.2 million. Correct, Sia. Thank you all. So that hasn't changed. We haven't taken any cost out with regards to disposal. We haven't added any cost in either because we had no acquisition. So the cost is still 1,200,000 at the end of the year. Right. So now let's look at our accumulated depreciation at the end of the year. We started off with a balance on that account of 240,000 rands. Remember, it was a credit balance, which means we indicated here as a negative. We've got another negative. So once again, we've credited that balance. So if we add two negatives, right, minus something else is similar to adding them up, but it just remains minus. Okay, so in that case, if we add them up, 240,000 plus 192,000, that gives us 432,000. Hopefully that is correct. 42, yeah, that is correct. Okay, and then just to double check it, ladies and gents, just to double check that we haven't made a mistake, what are we going to do? What are we also going to do? We're going to take the 1,200,000, right? The cost at the end of the year minus the accumulated depreciation at the end of the year of 432,000, and that must also give us that 768,000. If it doesn't, ladies and gents, then it means we've made a little error somewhere. So your carrying amount at the beginning of the year plus movements in the carrying amount must give you the carrying amount at the end of the year, and then also the cost at the end of the year minus the accumulated depreciation must give you that same answer. If it doesn't, then we've made a little boo-boo somewhere, means we'll have to go and find it and we'll have to go and fix it. Okay, so now let's go to our next category of property, plant and equipment, being the vehicles. Let's have a look at what movement. First of all, let's just have a look at the movement on the carrying amount, right? And then we use the other method to go and double check whether we haven't made a mistake, right? So, ladies and gents, the carrying amount at the beginning of the year was 620,000, right? At the beginning of the year, it was 620,000. What happened during the course of the year? What are the movements on that vehicles carrying amount? We added 1,260,000, so we must now add that 620,000 at the beginning of the year plus 1,260,000, and then we and deduct the 460,000, right? And then we also need to go and deduct the 160,000, and then that must give us our closing carrying amount at the end of the year. So that should then be 1,260,000. If it isn't, then you must please notify me. So that then gives us our carrying amount at the end of the financial year. But as we said, we must now also go and disclose what it consists of. What are the components that combine to provide us with a carrying amount? It is the cost less the accumulated depreciation, right? So what is the cost, ladies and gents? Now this is a little bit trickier. So let us see what is the cost. The cost at the beginning of the year. So the cost at the beginning of the year was 1,100,000 rands, right? And what did we take out of the cost? What did we take out of the cost? We took 1,100,000 out of the cost, right? So then it means the cost at this stage is 0. What did we add to the cost? We added 1,260,000 to the cost, and then the depreciation doesn't affect the cost, it only affects the accumulated depreciation. So in other words, to arrive at the cost at the end of the financial year, it's going to be the 1,100,000 at the beginning of the year minus the cost that we've taken out of that account, which just happened to be 1,100,000, just because it was the only vehicle, and then we've added the 1,260,000. So what will be our cost at the end of the year? It's going to be 1,260,000 rands, right? Does that make sense, ladies and gents? Are you happy with that? Yes or no? Thank you. I see you've typed it for me there while I was looking away. Thank you, Leonardo and Kusana, Sia. So you've all already typed it for me there. Somebody mentioned it when was it last week, Thursday, that if I start copying from your text box, I might have to pay you copyright. So I'd rather not copy from the text box. I'll just type it myself. Oh, so now let's go and have a look. We've looked now, just before this, only at the cost, right? We've only looked at the cost. Thank you, Kasana. We've only looked at the cost. What effect the transactions and the movement had on the cost? The 1.1 million minus the 1.1 million plus the 1,260,000. Now let's only look at the accumulated depreciation. Only the accumulated depreciation. So we started the year off with a minus 480,000, right? We started off with a minus 480,000. Then we took out 640,000. We took out 640,000, right? So what does that mean? It now has a positive of 160,000. And then we have deducted the 160,000 again. So what is our balance at the end of the financial year? It is 0. So we are going to indicate that with a little dash. And again, ladies and gents, remember we must now go and double check whether this adds up. So we're going to take our cost at the end of the year minus the accumulated depreciation at the end of the year. That must also provide us with that carrying amount at the end of the year. So then as a final step to round this off, we must just now go and add them up across. So let's start with that line, the line that contains the carrying amount at the 31st of December 2018. We add the two up across, so that gives us 2,028,000 rands. We add that line across as well, so that will give us 2,460,000. 2,460,000. And we do the same with this line. We go and add that up across, so it's minus 430,000 plus or minus 0, so that will then remain minus 432,000. And then as a last check, we just go and make sure that we haven't made an error somewhere. So as a double check, we're going to take the aggregate total cost at the end of this financial year, which is 2,460,000. We're going to deduct the total aggregate accumulated depreciation at the end of the financial year, which is minus 432,000, and that must then also give us that 2,028,000. If it doesn't, like I say, then it means we've made a little slip up somewhere along the line during this process. Then we must just go and find our error until it balances out. Right, ladies and gents, that is the presentation and disclosure. So now this is basically our last class for the term. I know that Sunny will still do a PPE note with you on Saturday, but this is now our last class for the term. Then you can prepare yourself for the exams. Let me just see what Nkusana says here. Sir, can you please explain how you got 0 for accumulated depreciation at the end of the year? Okay, let's do that. I presume you are talking about the vehicles, the category vehicles. So let's go and have a look at that again. Remember, when we just look at, thank you, Nkusana, when we just look at the carrying amounts, initially when we calculate that figure, we take the opening carrying amount and then we add up all positives that had an effect on the carrying amount. So it'll be all the positives in that column, and we deduct all the negatives in that column to arrive at the figure for the net carrying amount at the end of the year. But then to arrive at these two components, the cost and the accumulated depreciation at the end of the year, we've got to look at the cost component and the accumulated depreciation component separately. So what we said there, just going to look at any balances and any movements that only have an effect on the cost, right? Only the ones that have an effect on the cost. So those will be the opening balance on the cost account at the beginning of the year. I know, Nkusana, I'm not answering your question yet. I'm just taking it from where we started there. I'll get to that. Right, so we're only focusing on the cost. So it started with a balance of 1.1 million. Then we had some additions. We had some additions of 1,260,000, so we must add them together, right? So we must add the cost, opening balance of 1.1 million, plus the cost of the additions during the course of the year. But then we must also take into account that there were disposals during the course of the year. But that amount of 460,000 relates to the cost of the item that we have disposed of, but also its accumulated depreciation. So there we must now have a look, what was the cost? Remember, we're only talking about the cost. What was the cost that we have taken out? And there we've highlighted it, minus 1.1 million. So it was the 1.1 million at the beginning, plus the cost of the additions, minus the cost of the items that we have disposed of. That would have given us the cost at the end of the year. Now, to answer your question, this is exactly the same process that we are doing, but now we are completely ignoring the cost component. We are ignoring the cost component. Sisanda, okay, so you subtract the cost at disposal. Yes, you only subtract the cost at disposal when you are determining the cost at the end of the year, right? And the same when you want to determine only the accumulated depreciation at the end of the year. What must you go and do? Now you must go and ignore anything that has to do with the cost. You only focus on movement on the accumulated depreciation account, not the cost account. So we know that the cost, the accumulated depreciation account had an opening balance of 480,000 at the beginning of the year, right? Then, ladies and gents, we increased that with the depreciation for the year, which was 160,000. And then we know that there was a disposal. But again, that 460,000 that is sitting there, that is the carrying amount. And the carrying amount consists of a cost component of 1.1 million, and it also consists of the accumulated depreciation on the item that we have disposed of, 640,000. So to get to that zero that we've got there, we started with an accumulated depreciation at the beginning of the year. We added the depreciation expense for the year, but then we had to go and deduct the accumulated depreciation, that one, that's 640,000, on the item that we have disposed of during the course of the year, right? So that is how we got to that zero. Does that answer your question there? Was it Nkusana? Thank you, Sia. Thank you so much, Sia. There we've got it. So Sia started off there with the opening balance of 640, and then deducted the accumulated depreciation on the item that we are disposing of, because remember we are getting rid of that balance, and then he added the 160,000 depreciation, which will then give us a closing balance of zero. Thank you, Chrisana. Thank you, Sias. Thank you, everyone. Is there any other question, or have you got any other questions that you'd like to ask with regards to property, plant, and equipment? Then you're welcome. You can type it, or you can unmute your mic and ask it in person. I like to hear your voices. No questions, ladies and gents? There we go. Sisanda, you've got your hand up. Yes, Sisanda, what would you like to ask? Just remember to unmute your microphone when you speak. Or did you do a Lauren? Don't worry, it happens to all of us. Sisanda, we still can't hear. If you'd like to ask something, just remember to unmute your microphone. The one that's in the control panel next to your initials, just to the left of the camera. Or you can type it. Or did you accidentally raise your hand? Is it not working? Okay. Sesanda, yes. Sometimes with Blackboard, you'll have to go to your settings. You'll see in the control panel where it's got, I think it's the right hand bottom corner. There's that purple oval with the white X in it. So that is your control panel. That's where you find the chat box and so forth. There's also a little cog there. The cog represents the settings. So you might have to go to your settings, and then amongst the settings, it asks you, it guides you through how you can activate, or how to make sure that Blackboard recognizes the microphone that you are using. Okay, so you've typed it anyway, so that is good. I wanted to ask, why do we then only write the carrying value on the notes if we are not going to include it at the end? Why do we then only write the carrying value on the notes if we are not going to include it at the end of the disposal? We are going to include it. It just so happens. Let's take it further. What will happen in the next year, Sisanda? In the next year, let's just assume, for argument's sake, that there are no disposals and no additions to the vehicles next year. But then you will have depreciation in the next year, right? you will have depreciation in the next year. So in the next year, what will happen, the following year, the 2019 year, you'll start with this as your opening balances, right? So you'll have 1,260,000 as the opening balance on the cost. You'll have a dash or 0 as the opening balance on the accumulated depreciation. So it means your carrying amount at the beginning of the following year, the 2019 year, 1st of January 2019, will be 1,260,000. But then let's just go, for argument's sake, say that I know that the new vehicle has got a different useful lifetime and a different depreciable amount. But let's just say, just for argument's sake, that you have calculated and the depreciation for the next year is going to be 160,000 rands, right? Then you will have an opening balance of dash plus or minus, if you wish, because it's a negative, the 160,000 depreciation for that particular year, which will mean that at the end of the 2019 year, you'll have a minus 160,000 there in your accumulated depreciation, right? It just so happened, if you remember from the question, it just so happened that that new vehicle coincidentally was acquired on the very last day of the financial year, so they haven't provided depreciation on that vehicle yet, and that was also the only vehicle that they had at the end of the year. So at the end of that particular year, there was no accumulated depreciation, simply because the old vehicle was disposed of. There was no other vehicle except the new vehicle, and you only acquired that new vehicle on the very last day. So you're only going to depreciate it in the following year. Does that answer your question? Oh, you've already said all right. Okay, perfect. Any other questions, ladies and gents? Doesn't seem so. Okay, then all I can tell you is happy studying. Enjoy your cramming for the exams, and then I'll just briefly co-pilot Sanele Siwe again on Saturday when she does a disclosure question with you. Possibly I'll give her. I must just get around to it. I'm going on a course over the next 2 days from 8 in the morning until 4:30 in the afternoon. So I'm going to be not be able to look at too many other things than the course that I'm on. But perhaps on Thursday or Friday I will send her a second question so that she can do this note, the disclosure part, the property, plant and equipment note, and perhaps another question as well. Thank you very much for joining me. See you on Saturday. Thank you very much. Have a lovely evening. Bye-bye.